Welcome to the Anchorage Meetup Summer Session, August 8, 2024, IBD Meetup number 129. My name is Reggie. My email, for those of you who need to get a hold of me, is omginvestors@gmail.com. This will be the last summer session of the 3 summer sessions that I took on after this. The next one in September, we'll be going back to Floyd after his summer vacation. Let's get started, folks. Quick disclaimer, all comments made and materials presented during this IBD meetup are for educational purposes only and not intended to be interpreted as investment, buy, hold, or sell recommendations. All investments have risk. Past performance is no indicator of future performance. The possibility of losing money is a risk each investor might be willing to accept without looking to blame anyone at IBD or Meetup or Floyd or Mr. Reggie, who are unpaid volunteers. The personal responsibility of each individual investor is the key point to this disclaimer. If you accept the provisions in the disclaimer, you can continue to participate in tonight's IBD meetup. Thank you. A big thank you goes out to Floyd Damron for allowing me to host these and setting up the Stochastics Foundation. For Rick Kelleher to take that foundation using his programming skills, using Excel to automate that, and to Gary Taylor for putting in the trading view, allowing a much more dynamic testing and backtesting option. And for this meetup, I'd like to thank a gentleman named Chad Caswell, who's part of the participants, just like you all, who was kind enough to share some of his findings in terms of additional indicators that seem to improve performance. We will go through them later in the slides. If anybody has any questions, there's a little hand icon at the center or bottom of your screen. Press that, or if I'm not getting to you, simply unmute yourself and ask questions. Please mute yourself now and turn off your video so we can get started on this slideshow. Today's agenda will be looking at the IBD Market Plus. We'll be looking at the leveraged ETF year-to-date performance. We're going to take a look at Dr. Eric Wish. Some of you might know he's a common figure in the IBD arenas. He has his own general market indicators that help him avoid downtrends. He often talked about how when his indicators go into an uptrend, investing in TQQQ beats 95% of the NASDAQ 100. We're going to take a look at the trading results for TQQQ based on Dr. Wish's indicators compared to the weekly primary strategy that Floyd developed for us. Second thing we're going to take a look at is the market wisdom, sell in May and go away. Is that for real? Does it really work? We're going to take a historical results of TQQQ and historical results of SOXL. We were to actually sell May 1st, not touch it, and come back and buy again November 1st. But then we're going to talk about potential indicator for SOXL improved results. And these are the ones I thanked Chad Caswell for earlier. We're going to look at the trading view indicator, all percentages since we're moving average. We're going to look at the SOXL results using indicator versus no indicator. And we're going to look at the indicator across different time periods. We'll be looking at all of those very thoroughly. At the end, we will go through some slides looking at the best results inputs. Thanks to Gary and Gary's team, which have tested well for daily TQQQ, weekly TQQQ, SOXL daily and weekly, and more figures. We'll go through Q&A. At any point, if you have questions, please hit the hand icon at the bottom or jump in with any questions you have. Just unmute yourself and ask. Theme of this week, you place a stop loss, right? After the week we've had, I assure you, some of you guys, if you didn't have stop losses, you wish you did. And if you were like me and you had a stop loss, it didn't matter, but the sliced right through it and I got a nastier loss than I expected anyway. But still, good habit to have, setting a stop loss. IBD Market Pulse and Exposure. This was as of end of yesterday, August 7th. Indexes were lower yesterday. The IBD exposure is currently at 0 to 20%. And those are some of the leaders up in volume and the leaders down in volume as of yesterday, Wednesday, August 7th. This is the LETF year-to-date performance as of end of day, August 7th. As you can see, SOXL right there as of yesterday, end of day, was down 6.4% for the whole year. TQQQ, which is second on the list, was only up 10% for the whole year. And FNG was still up about 39% for the year. So SOXL took a nasty spill if you were just holding, buy and hold for this year so far. So we're going to start with Dr. Eric Wish's Wishing Wealth GMI system. For those of you who don't know who he is, if you're involved in IBD related meetups and webinars, Dr. Wish is a common theme. He's a professor based out of Baltimore, and he's a retail investor himself. He's been trading since the 1960s. So he's been through a lot of trading in markets. He's often a speaker at IBD events, and he uses the IBD system along with TC2000 and his own special indicators to time and exit entry for the market. Dr. Wish updates his website and tweets his updates every day. You can go to his website at wishingwealthblog.com. Dr. Wish has created his own proprietary indicator system called a GMI, General Market Indicator. And the GMI system has kept Dr. Wish out of major market downturns back in 99, 2000, the 07 and 08, then in 2020, and some of 2022. Dr. Wish has noticed that when the GMI system signals a QQQ uptrend, investing in a TQQQ at the start of that uptrend beats 95% of the NASDAQ 100 stocks. And Dr. Wish is a very conservative investor, so he errs on the side of caution, and he is, especially as he approaches retirement. So these are some of the screenshots from Dr. Wish's blog. If you look on the top left, that one's from 2013. The GMI strategy using 3 times ETF beats IBD 50. On bottom left, that's from July 20th. TQQQ beats almost all stocks. On the top right, it's from April 2020. And the bottom right, more recently from June of 2024. I put these up here so you all can see that Dr. Wish talks about the TQQQ beating most of the NASDAQ 100 components every time during an uptrend. So we're going to compare Dr. Wish's GMI system to the TQQQ primary stochastics. What's in front of you on the screen are the stochastics that Floyd's weekly TQQQ strategy utilizes. The markets with weekly, 533 stochastics, a daily stop of 13%, trailing stop of 18.1%. We go long when the stochastics are between 10 and 100, and we go short between 10 and 37. The exit cross line is 37. There's no profit target set for this. For those of you who've been with me the past 2 months have seen slides like this. This is a comparison of the buy and hold on the left. In the middle of the 2 gray bars, we have Floyd's weekly strategy. On the far right, we have Dr. Wish's GMI strategy. We'll go through this step by step so you see the differences. 2015 is the first year I've highlighted. It was choppy because the weekly strategy lost about 9.7% at the end of the year for P&L, whereas the Dr. Wish strategy was also down about 6.9%. In 2015, the buy and hold strategy was ahead of either the weekly Floyd strategy or Dr. Wish's TQQQ strategy. Okay. We jump ahead to 2018. The buy and hold strategy lost about 20% that year. Compare that to Floyd's weekly strategy, we made a gain of about 7%, and Dr. Wish's strategy, which lost a little bit, but a lot less than the buy and hold. And if you look at the 3 accounts at the end of 2018, you would have about $86,000 in the buy and hold, $45,000 in the weekly strategy, and the $35,000 in the Dr. Wish GMI strategy. That is where you would be sitting at the end of 2018. Now let's take a look at 2020. As you all remember, COVID hit and the Fed unleashed all this liquidity and the government was handing out checks to people. At the end of 2020, the buy and hold strategy gained about 110%. We were at about $422,000 if we had held buy and hold. If you look that same year, the weekly strategy primary inputs generated almost a 328% return for a total of $371,000. And the far, you'll see Dr. Wish's strategy also did fairly well, returned about $177,000, 177% rather, for a total of $185,000. That's where we stand at the end of 2020 on total. What is the starting amount? The starting amount is on the top left of the chart. It's $10,000 starting in January 2013. Sorry if I didn't mention that. 2022, remember the bear market of 2022. If you were to buy and hold, you would have lost almost 80% of your money. You would have ended the year down about $161,000 of what you would have had left. If you were in the weekly strategy, your account would have been down about 20%, but you still would have had about $366,000. If you look at the GMI strategy, unfortunately, it didn't perform that great that year, ended up around $97,000. This was at the end of 2022. Here we are at the end of 2023, where the buy and hold makes a strong comeback. You're left with $482,000. The weekly strategy is doing quite well, ending up with $667,000. And the Dr. Wish strategy ends up with about $172,000. So what we're seeing here is at the end of the 11 years, from January 2013 to January 2023, the GMI strategy, as well as both the buy and hold or the primary weekly input strategy for TQ. If you want to look at the details in terms of the CAGR, number of round trip trades, you'll find that I break up the CAGR into 4 sections here. At the top, we have the whole 11-year section between 2013 to 2023. Then we look at smaller sections between 13 to 17, 13 to 19, and then 17 to 23. I choose those because it allows you to see if there was relative underperformance or overperformance by any specific strategy. If you look on the far left, you'll find that the Floyd weekly strategy has done fairly well across the 11-year period, although from 2013 to 2019, it was lagging the buy and hold. It caught up because of the massive downturn in 2022, which buy and hold lost 80%, but the weekly strategy only lost about 20%. Okay. Does anybody have any questions at this point about what I've just presented? Okay. So, in summary, the GMI system, which is a general market indicator system, has poorer TQQ returns when compared to the TQQQ weekly MS primary inputs from 2013 to 2023. The GMI system has more round trip trades over that 11-year period. The GMI system has smaller losses per trade. The average win for the GMI strategy was about 19.4%. The average loss was about 6.61%. Now, if you look at Floyd's strategy in the middle, the average win was about 53%, but an average loss of about 27%. So the losses and the wins are smaller with the GMI strategy.
Hey, Reggie.
Yes, sir.
Hey, yeah, this is Rick. Can you show the screen that you had first up there that filled in this whole thing? I think it was your first slide.
This one?
Yeah, there we go. Just taking a quick screenshot of it.
You don't have to. This whole video and the PDF will be available to you after this, a full video of this presentation and a full PDF of every slide you're going to see here will be available for you all to see. And if you have any questions in the middle, please let me know. Rick, do you have any other questions about this?
No, that's good. Thank you.
No problem.
Can you go to the previous slide?
This one?
Yes. So this long and short or sell 10, 100, 10, 37 is confusing. Is it?
Sure. Let me explain to you what that means. Actually, let me see if I can change my tab here. Sanjeev, are you familiar with the TradingView script?
No, I mean,
Okay. These are terminologies used specifically for the TradingView script because those are inputs for the TradingView script. I plan to show it to you all later on. Actually, let me show it to you now. My assumption was that everybody's familiar with the TradingView inputs, but many people are not. So I will get to that towards the end in the slideshow. Does anybody else have any questions or need to see any other slides before I move on?
Hi, I'm new to the group, and one thing I noticed is like this group mostly talk about the weekly strategy, while I noticed the daily strategy yields much higher return. Is there anything I'm missing here except the weekly just requires less trades?
Yes and no. We will be going through the daily strategy a little bit later. Did you have a chance to view
The previous videos?
Okay, you watched our 2 previous summer sessions?
Yes.
So we did cover the daily, right? You remember that?
Yeah.
The reason we talk about the weekly is because the weekly one was what they originally started with when Floyd and Rick put this together and mechanized it through Excel. That was back in September of 2023. They started with a weekly strategy and weekly stochastics. The main benefit of weekly stochastics is that there are a lot fewer trades than the daily strategies. So people who are not as active in trading and prefer to look at less often will prefer a weekly strategy simply because that's what they prefer. People who are more active traders may prefer a daily strategy if that's their preference. Anybody else have any questions at this point? Feel free to jump in. No? Okay. Just jump in at any point, ask the questions. If I made assumptions that you guys have seen the previous presentations, but if you have not, feel free to ask. We'll go through them again to your satisfaction. This is the Dr. Wish stuff that I'm just going through again. This is the CAGRs at the end of the 11 years. And this is where we were in terms of where we are now. My goal here wasn't to diminish Dr. Wish's work. The only reason I know about Floyd is because I attended some of Dr. Wish's webinars for IBD. He's a very generous and kind man, shares a lot of information. His blog is free. His Twitter updates are free. He has other techniques that he uses to research and trade individual stocks. For those of you who use a program called TC2000, Wish has scripts in there for individual stocks that he thinks are going to go up or down. I welcome all the participants to go through Dr. Wish's GMI archives, confirm the trading history, because in order for me to get these trades, I had to go through his blog month by month in 2013 to 2023 and track all the uptrends and downtrends. For those who feel like they want to go through it again, maybe if I've made a mistake in a single individual trade or more, please look it up, inform me. And it's all the archives are available on wishingwealthblog.com. On the far lower right, there's a drop-down box called Archives. You can click on that, and it goes all the way back to 2008. I started in 2013 because that's just simpler for 11 years of data. So what have we learned? This is what y'all look like. This is what we all look like. Have a new trading strategy. We're ready to start making millions of dollars. Anybody have any questions? If people are asking questions in the chat, I don't know if I can be responsive to all the questions. So if you have a question directed at me, please ask it through audio. That's my fastest way of answering. There might be questions that other people might be able to answer, but if you have a question for me.
Hi, Reggie. Do you have a list of the trades for the last few years? I'd like to map them out just to make sure I have my set up correctly so I could see it.
Laura, did you ever contact Gary regarding the ability to use the TradingView program?
I haven't used TradingView. I use TC2000.
Email was at the top, omg.investors@gmail.com. Just send me email and asking me exactly what you said for a list of trades of the MS Weekly Floyd primary TQQQ inputs, and I'll send you an Excel or CSV file of all the trades. If anybody else needs that as well, who's listening, please simply email me at ond.investors@gmail.com for this specific presentation, for these specific trades regarding the MS Weekly Floyd trades. I'll be happy to get to you all. Yes, George.
It might be a good idea if we limit questions so that you can get through the whole presentation.
All right. Thank you, George. All right, let's move on. Okay. So email me at ond.investors@gmail.com. We have sell in May and go away, which is generic market wisdom. As you all might have heard of, the stock market adage based on Stock Traders Almanac. Historical data reveals that the top performing 6-month period on average has been from November through April. Consumer discretionary, industrials, materials, and tech have outperformed from November through April. Alternatively, defensive sectors faced the market from May through October. Seasonal trends appear to be holding through over the past year. The S&P gained about 5% from May 1 to October 31st, but gained about 20% from November 1 to April 2024. This above info is courtesy of fidelity.com. So we're going to put this to the test. We're going to apply it to TQQQ and SOXL from 2013 to 2023, and we'll see where we stand if we do the sell in May and go away. This is our TQQQ sell in May comparison for 2013 to 2023. On the far left is the black hole. So in the middle of the two gray bars, we have our sell in May and rebuy November 1st. You effectively sold whatever you had on May 1st. You didn't touch it account until November 1st, and that's when you rebought. And on the far right, we have the original Floyd weekly strategy with the same inputs I showed you earlier. Just to highlight a couple of things here, in 2018, for example, when the market dropped 20%, if you had done a sell in May and go away, your account will be down about 26%. And as the Floyd weekly, you would have made about 7%. So also, take a look at what your accounts actually, the balance would be. If you started in January 1st, 2013 on the top left with 10,000, by the end of 2018, a buying and would have left you with 86,000. You would have had $16,000. With Floyd's, you would have had about $45,000. This is still TQQQ. At the end of 2022, sell in May and go away wasn't very helpful. We still lost about 63% of the portfolio. It's not as bad as 79%, but still pretty bad. And if you saw holding Floyd strategy, we would have had about 366,000. Folks, I want you to look at the number in the middle of the screen, sell in May and go away. This is the cumulative amount you would have in your bank account if you sold in May and rebought in November, sold in May 1st and rebought November 1st after almost 10 years, starting with 10 grand, had at the end of 2022, $20,900 a year. Okay. And if you look at the 2023 fiscal year, where buy and hold returned about 198%, our sell in May and go away returned about 155%, and the Floyd strategy returned about 82%. This is what your total account value would have been like under these three scenarios. And in the middle, the sell in May and rebuy November 1st for EQQQ. At the end of 11 years, we would have turned 10 grand into about $53,000. Not bad, but not as nice as $600,000. So this is SOXL. Same strategy. We're going to sell May 1st, rebuy November 1st. We'll quickly look at a couple lines here. 2018, where SOXL lost about 39% of its value for an account ending in $130,000. Our sell in May lost about 25% and had an account value of $26,000. The primary weekly strategy for SOXL lost about 36% that year with an account of about $51,800. Jumping ahead to 2022, buy and hold lost almost 85% of its value. Our sell in May lost about 64%, and the weekly strategy lost about 40% that year as well. Look at the three account balances at the end of 2022. If you had sold in May and rebought in November, looks like 10 years, you would have turned 10 grand into about $44,000. We have a massive rebound in 2023, where our sell in May jumps ahead with almost 211% returns. The weekly strategy for Floyd returned about 82%, but at the end of those 11 years, selling in May and rebuying in November every year would have left your portfolio with about $138,000 in its account versus the $1.39 million that you see on the far right and the $57,000 on the far left. Do we have any questions at this point? The sell and May strategy can, in random years, perform better than the buy and hold. For example, with TQQQ in 2019 and also SOXL in 2019 and 2023, where the sell and May strategy performed very well in both of those years. But cumulatively, as you can see, the sell and May strategy really underperforms for SOXL and TQQQ. So for an LETF investor, you cannot take your eye off the ball in the summer months. It's been a rough week. We're in the middle of summer right now. It seems brutal, but don't forget the sell and May strategy doesn't even go back in until November 1st. I'm sure we'll have a lot more excitement between now and then. So let us not sell in May and go away. Okay. Next, did anybody have any questions at this point about the last part of the presentation? Yes, Katrina.
Hey, I just have a question.
I'm sorry, ma'am. I cannot hear you.
Oh, hello?
Yes, your volume is really low.
Okay, let me see if I can fix that.
I can hear you a little better now if you speak up.
So my question is, have you tried to do the go away in May with Floyd's technique? So you just stop trading using Floyd's?
You can't do that because we cannot sell in May and go away for that strategy. Because if you're going to apply the strategy, you have to apply the full strategy. So the answer is no, I have not done that because that's really not the strategy itself.
Very good answer. I totally understand it. I was just curious if you had seen any results like that.
Does anybody else have any questions? Okay. Sometime in July of 2024, one of the participants using TradingView found an indicator that appears to improve results for the daily SOXL strategy. We'd like to thank Mr. Chad Caswell. Chad takes the time and energy to find and test multiple indicators and then applies them to see what the results would be for daily or weekly, TQQQ, SOXL, and so on. This specific indicator is called the percentage distance from moving average. It's a TradingView indicator that's available for free for anybody. That's by an author named DKN Crypto. This indicator showed an increased return for SOXL daily inputs from 2013 to 2023. We will demonstrate to all of you how this indicator impacts the result on a year-over basis. We will show you how this indicator performed over different periods during those 11 years. We encourage all participants using this script to find additional beneficial inputs and indicators that can help improve results without worsening drawdowns. This is the actual source code for the indicator. It's free. It's published openly on TradingView under the author's name DKN Crypto. So the indicator shows the percentage that an asset price is above or below its 50-period simple moving average. You can change the 50-period moving average to whatever you like in the settings. There are other versions of this indicator that are all public. They all use exponential moving average. This one uses simple moving average. I'm going to quickly show you what that looks like on my screen so you'll know what I'm talking about. Can you see this trading view screen's trading view tabs?
Yes.
Okay.
Yes.
I'm going to cover two things here before I go into this. The first thing I'm going to show you is the indicator, and then I'm going to answer Sanjeev's question at the beginning, which is what is a long and short. If you look under indicators right here, it's called, can you see my mouse? Can you guys see my mouse moving on screen at all? No. If you look at the first thing on the top section, you will see the pricing, then you'll see the cascade indicators, and then you'll see this thing called percentage for moving average. Can you guys see it now?
Yes. Okay. Is there a way I can maximize the screen to only see your shared screen?
If you go down to more options, next to that red phone at the bottom, it's got
Full screen. Why don't I say full screen? I have my browser already on full screen.
On the blue, do you see right at the bottom next to the red lead call, there should be 3 vertical dots. You click on that. Did it have a full screen option for you?
Oh, now it does. It just does the full screen of the browser, but I still see your face and I still see all the icons for George and Laura and Coach Katerina. I'm trying to get rid of those.
All right.
You're looking good.
bottom right of the screen. It's got the 2 little people, the third from the right. Click on that and it takes away.
Oh, it actually pulled up a list of people for me.
Okay, try it again.
Yeah.
You just click on the spotlight, or you just full screen the share screen.
Oh, okay. I see what you're saying. So go to the 3 vertical dots again. Does that work for you, Rick?
Perfect. Yep. Exactly.
Okay, sure. Can you all see my mouse moving around now at all?
Yes.
Okay, good. All right. So this is called the percentage distance from moving average. This indicator, if you were to go in Trading View and you were to type in percentage distance, this is the one, right? The second one that says percentage distance from moving average by DKN crypto. You don't need to have a paid subscriber of Trading View to access this. If you click on this, it'll show you the source code. For those of you who are technically oriented, you can use that source code if you want. I applied it here at the bottom. You'll see the price bars. Below that, you see stochastic indicators. And this yellow line right here is the value of the percentage distance from moving average. This is how we put it into the screen. And then you can use it in your trading. So this is the strategy for the SOXL. There's a little icon here for the script called settings. When you click, this opens up. Sanjeev, I hope you're paying attention here. These are all the inputs that you have to put in. You start with daily or weekly. In this case, it's a full stochastics. We're going along. The bottom, we have this section which says the fast line, the strategy will exit if the fast line crosses beneath. This is an input number or variable you can change. Longs are entered between the low and the high of the long. And it says short are entered between. It should actually not say shorts. It should say sells because we don't really short. Those are the variables you put in there. Instead of the stochastics that you see fit, you can add another indicator and use that indicator. Do you understand that in terms of where the longs are entered and shorts are entered and exit line? This is where those are simply inputs and variables that you enter in to the script, which will then use those input variables and generate outputs for you. Okay. So now that you all have seen the indicator and how it works, I'm going to go back to the slideshow. Can you guys see the slide again? Slide number 31. Okay. Yeah. This is the source code for that specific Trading View indicator. You can look at it on Trading View yourselves too. And then what we did is this is what we did in terms of comparison. We took a look at the original SOXL daily, which is your middle column. And on the right, we have SOXL daily with the indicator. Every single line is the same, except for the last 2. We have the same full stochastics. They're 1844. We have a daily stop of 6.3, a trailing stop of 13%. The longs, the shorts, the exit, and the profit target are 33%. In the far right, an indicator length of 50-day simple moving average. The indicator has to be less than 28, meaning less than 28% away from the moving average. I'll give you an example of why it's 28 and so on. So you'll see all that in the next few slides. So here, what we're doing, a lot of data on this table. Again, as usual, sorry, go ahead, Rick.
What was the interpretation of 28 again?
28 basically is the distance from moving average. So it's a 50 moving average, and the distance from moving average is less than 28%. When the price is below 20, when the indicator is 28, that's when we buy. Entries are made when the indicator is less than that. If you want, I'll show you exactly what I mean. Let me show you. All right. Can you see the trading view in the settings? We have fast line, slow line, stochastics, and here's where we add another indicator. So in my case, my indicator is called percentage distance from moving average. I select that. And in this case, I say indicator is below level. I set the level at 28. And then I run the strategy for 2015, 2023, and then okay. Then it generates all these results that I see here. Okay. Versus if I don't want to use the indicator, I simply go back here and say none, meaning don't use the indicator, and can recalculate without using the indicator. Does that make sense? In the presentation table that I was showing you earlier, I have selected indicator is below level. I've set the level of 28, and that's where I'm going to show you the year-over-year calculation. Let me go back to that screen real quick.
This is all in trading view.
What I showed you there, dart screen, that's all a trading view. Let's stick with this. These are the inputs we're putting in, and we're comparing an input where it says no indicator versus an indicator less than 28, as I showed you earlier. And these are the results. Trading view generates the list of trades. You then have to export them, go through them year over year. I cut off the dates at December 31st because some trades don't end until January 3rd or January 4th, but I want to know what the account was as of December 31st. So I'm comparing apples to apples. Now, what's interesting about this specific indicator is that the indicator did not show any difference until the end of 2020, or rather beginning of 2021. If you go from January 2013 to December 2020, the indicator was never triggered. Okay. As you can see at the end of that time, using the daily strategy for SOXL, your account values are identical at the end of 2020. In the middle section, 1.1 million, and on the far right, 1.1 million. And 2021 was the first time the indicator gets triggered. And you can see a subtle difference in the returns. In the middle, without an indicator, we have a return of 2.29 million, which is 105% return for that year. On the right, we'll see 2.4 million with 119% return. The yearly drawdown is the same. And notice on number of RT trades, we had one fewer set of round trip trades, 23 versus 22 using the indicator. Skip ahead to 2022. 2022 was arguably the most interesting for this indicator. SOXL lost 85% of its value that year. If you had used the 1814 forward daily without the indicator, you would have made 35% as a P&L for 2022. But if you had used the indicator, you would have been up 76% for that year. Going to 2023, the P&L return without the indicator is about 82%, but using the indicator was actually lower, was 70%, and it had fewer trades. Look at the account values at the end of the 11-year period. At the end of the 11 years, you have an account value that took 10 grand in January 2013, turned into 5.66 million, and the same 10 grand became 7.33 million over that 11-year period using that indicator. We're using the indicator on the right. You had 207 total trades versus 215. So you had 8 fewer round trip trades, a total of 16 actual trades. You have the same drawdown level. You have a slightly higher win rate, meaning percentage of trades that were profitable, 48.79 versus 47. And then you can see the average profit loss per trade. There's a small and subtle difference. If you look on the right, you had a slightly higher average profit, like only 0.03% high profit, and a slightly lower loss per trade. But that was enough in that 3-year period to make a difference, 21, 22, and 23. This is comparing the CAGR side by side. If you look at it, remember, all the difference started showing up in 2021. So anything before 2021, the CAGR is looking identical. From 13 to 23 versus 17 to 23 and 21 to 23, you can see what the difference was. 21 to 23 is interesting because we went to a bear market, the Fed was shaking out liquidity, and we still outperformed over that 3-year period.
Reggie, I'm not sure if you'll be able to answer my question, but I'll just go ahead. It might be helpful to us if you could show us on the thinker's chart where this indicator eliminated a trade. We can see how there's 28 distance on the 50-day moving average. At least for me, anyway, as a visual guy,
I don't have those specific trades that were deleted on me.
that's fine. That'd be a homework thing for me to do then, because it's really easy just to go through and find the trades that are eliminated and then look at the bar chart, see where the moving average line is, see where the stochastics lines are. And for me, I like to get a good idea if I use a secondary indicator, find out why is it making me more money? Then that just gives me a better appreciation.
I want you to go back there and look at the year 2023. The indicator actually made us less money that year. So there's no guarantee. I know that you're looking at these two numbers, 5.6 million or 7.3, and our eyes start to pop up. Oh my God, that's fantastic. But the reality is, if you had started in 2023 January, your return would have been lower using just the indicator. So the point here is that do not rely on an indicator for the sake of being an indicator, because when you start matters. And if you had started in 2023 using the indicator, you would have made 70%. But not using the indicator, you would have made 82%. So that's important to understand that there's no panacea, no magic cure. You have to test these things out. And when you start, makes a difference. George, go ahead, please. Your hand is raised.
Yes. How did you come about the 28?
I was going to explain that in the next few charts.
And my other question is, they were pretty much even up until 2020. Was it because of market volatility?
That's a very good guess. I don't know the answer. When you look at an indicator that suddenly seems active starting in 2021, but wasn't active all the years prior, you have to wonder what it is. Logically, you can be like, okay, did the stochastic not match the indicator? Obviously, assuming there's no calculation error, that's why. But then that's not, those three, a 3-year period between 21, 22, and 23 is not enough time to see if an indicator is consistently working. Like I said, if you look at 2022,
Again?
I'm sorry, Barry. All right. Did you ask me something?
Yeah, could you put the summary page back up as you're talking about this?
This one right here?
The original summary with all the data.
Do you want all the data being live right in the beginning, you mean?
On this one, yeah.
Hold on. This one?
I believe that's it.
Okay. So if you look at the year 2022, which is second from last, here the indicator smashes the no indicator because you get 76% return versus 35, and you're like, great. But when you start in 2023, all of a sudden the indicator doesn't do as well. So I always get a little cautious. Again, this is not a recommendation to anybody. I do it myself. When I see an indicator like this, I get a little cautious because I'm like, why didn't it start performing before 2020? What was it doing between 2013 and 2020? There's plenty of volatility. What happened? What I would have wanted to see is that if the indicator kicks in every year, and let's say out of these 11 years, maybe for 9 of them, it kicked in and it beat every single time, you start to get a little more confidence. And I'm going to go through a little bit and show you a slide later. I'll go through now, explain to you why I got over 28 and how I compared it. Does anybody have any questions so far about this slide, the summary slide, before I move on? All right, folks. Yes, Floyd.
Hey, Reggie, I've got a suggestion, and maybe some people haven't used TradingView yet. Would you please bring up the TradingView screen?
Sure. Last time I did that, my screen went nuts. Let's see what happens this time.
Now, show the performance summary.
Okay. This is with the indicator, Floyd?
Yeah, so you have $7.3 million, right?
Yes. Net profit of 7.3 million.
Okay, so now bring up your dialog box where you can show, what I want you to do is demonstrate to George and others how you picked the 28. So click on the setting box and move it over to the right or left. There you go. Now scroll down and see where the 28 is.
Yeah.
So make that 25. And our 7.3 million becomes 6.3 million. Make it 20. Now we only have $3 million. So make it 30. Okay, we have 6.4, so put it back to 28. And so the power of TradingView, in my mind, is, and I really started getting a better appreciation, is whenever you get if you want to use a secondary indicator or even on your primary indicators, in just a matter of a few seconds, you can change your indicator to optimize it. I'm assuming this is what Reggie's done on his particular secondary indicator. And what he did is he went through and by trial and error, paced through those various numbers and looked at what the total was. TradingView allows you to, and what we're really doing, when you change a number, when you change that number from 28 to 27, that involves hundreds, if not thousands of calculations, and it does it in about 1 second or less. TradingView is so cool that you can take any variables in your setup, the stochastic variable, the trailing stop variable, where the fast line sell point's going to be. You can change any of those variables. The power of this is amazing. And I think this is what Chad did. Chad on his own came up with this whole idea of using the distance on the 50-day indicator. And he's done several other indicators he's experimented on. Any of you using TradingView can do the same, and maybe one of you will come up with something really cool. If you find something like that, please let us know. And if you let us know, we'll give you full credit for coming up with a way to improve our strategies. That's all I have, Reggie.
Okay, no problem. Now, I'm going to bounce off of what George had asked and what Floyd just said. So what I do is, whether it's an indicator, whether I change any of those inputs on TradingView, it's not enough for me to just stop from 2011 to 2023 and be like, oh, I got a higher number. How wonderful. What I do is I break it down into, these are my own spreadsheets as examples that I'm going to show you. You can use this for anything, whether it's a leverage ETF, your own equity, indicators, 15 different indicators you want to use. I break them down into 2-year periods or 3-year periods that I see in my original perform better than the indicator or worse over every 3-year period between those 13 years. For this specific indicator, this test is not as useful because the indicator only started kicking in after 2021. So going all the way from 2011, 2013 over every 3-year period, you don't see any difference until you get here on the right side of the gray bar, the third from the top where it says 2019 to 2021. If you look at, okay, no move indicator less than 28, I make 103,000 versus 111,000. I go from 2020 to 2022, no indicator, I get 47,000 versus 70,000. Meaning if I had started my trading in 2020, then by the end of 2022, over a 3-year period, I would have ended up with 47 grand if I used no moving average indicator versus 70 grand if I did use it, and so on and so forth. Now, in this case, you can see that the indicator performs good over every 2-year period. The reason I do this is because it's one thing to look at a full chart from 11 years of trading, but the reality is we don't trade 11-year periods. We trade day by day, week by week, month by month. You need to know if using is working over 2, 3, 5, 7-year periods. I have a 2-year period, 3-year period here. I have a 5-year backtest in addition to that. For this specific indicator, it only starts in 2021. You don't have to really look at the first section. You just look at 2017, 2018, and so on. The point here isn't so much about comparing this indicator versus no indicator, because it's about the methodology that I use to tell me if I change the profit target from, in this case, we're using 33%, but let's say I want to test 20% or 31% or 40%. If I just enter 2013 to 2023, I might get a higher number, but then I might have gotten chopped up so many times because using that indicator that I thought was so good actually performed very poorly sometimes. We don't go backward in time, we're looking forward in time. You should know yourself. If you are not going to be happy losing money for 3 years without using the indicator, then you shouldn't be using the indicator because you don't know what's going to happen. So you have to make sure that indicator or those inputs that you change, whether it's the stochastics, whether it's the daily stop, whether it's trailing stop, profit target, any of those things actually work well across smaller time frames. So that was the point. Did you guys understand that part? I'll show you how I did it in TradingView in a second. For example, you go back to TradingView again, and Floyd is right. TradingView does allow this to happen very quickly. So let's say I have the profit target here. Let's say there's no indicator for a second. Okay, we're adjusting a different profit target. Right now, if you look on the top, it says net profit 5.3 million. I changed this to 20%. So it comes up with 4.4 million. Now, in that case where I'm using a different profit target, I might fail this profit target looks pretty close, or does it perform better than 33? should I go back and how do I know it works all the time? That's where I get a sense of satisfaction. Saying, does the 33% actually work well across 3-year, 5-year, 7-year time frames? You can cut that even smaller into 2-year time frames, 4-year time frames, whatever satisfies you to give you enough confidence to move ahead and incorporate that change into your trading. Does that make sense? Does anybody have any questions about that so far?
No, that's very good.
So and that's why, Floyd, and I want to mention this because it's important. Somebody else had found an indicator which is called volatility that looked like it was doing really well, but it only started working for 2022 or 2023. It didn't work before. I realized that the indicator was working off of data that was not accurate. So we couldn't use it. You have to make sure you understand is that the indicator is actually working off proper data. And that takes some testing and then some analysis of that testing to say, why is it working? Why didn't it work? Some methodologies you can apply to anything you decide to test for your own satisfaction. Our initial analysis and backtest show that the percentage moving average indicator appears to show some benefits for these specific stochastics, 18, 14, 4 on the daily. The benefit only shows up starting 2021. The indicator has only been triggered in the past 3 years, which is very rare, and we may need to wait for some more time to see how it performed. We need to review if this indicator works for other settings like SOXL weekly or other ETFs. I have not had the time to thoroughly test those tickers with this indicator. All of you participants are encouraged to test different indicators and verify using comprehensive backtests across different timeframes to ensure that the indicators can hold up across those periods. Are there any questions at this point before we move on?
Hey Reggie, this is Yogesh. I'm just trying to clarify my understanding of this new indicator that is being added. When you say less than 28%, the buy signals are taken only when it is less than 28%. Is that true?
Assuming that all the other criteria are met, we will check the distance. If it is less than 28%, before it buys, it's going to check that. If that's met, then it goes ahead and buys. So that's the understanding I have based on this indicator. This is from the 50-day moving average, and the current price of TQQQ has to be less than 28%, less than 20% above the 50-day moving average. And then if all the buy criteria are met, then just before we buy, it checks that simple moving average, and then it buys. That's the impression that I have. That's how this indicator works.
Less than above the moving average. Okay, I thought you said below the moving average before.
No,
You said indicators below level.
yeah.
Yeah,
So
that,
indicator has to be below 28% from the TQQQ.
The closing price and the 50-day moving average should be less than 20%.
That is the impression that I have based on the way this ticker is written. I don't know if you were here earlier where I shared the code.
Yes, I saw it. If that's the case, then it is not possible that the indicator did not trigger before.
Too. That's why I
So
said,
there's no new truths going on.
would you
So-
mention the code again? Hold on, let me go back.
say your point again. I didn't quite get it. Reggie understood you, but I didn't.
Yogesh said, he brings up a very good point, which is something that's been bothering me too. He said that the trigger only happens when the TQQ closing price is 28% above its moving average. There is no way that has only happened since 2021. That's many times between 2013 and the end of 2020. It is very likely that has happened, but for some reason, our indicator is not picking it up. Is it an indicator issue? Is it something else that we're not understanding? Or is it a trading view issue? It's my concern too. I'm not sure, but just based on how wacky and crazy SOXL moves, it's just highly improbable that we have not been more than 28% away. Now, it is possible that all of our other criteria have not been met. It's possible, but it is possible that our criteria and the indicated criteria didn't merge at that single point ever before 2021. It's not very high possibility, but it is small.
I'm looking at that indicator, the percentage distance from moving average, and I see that SOXL has been above the 28% a lot. And it looks like there's buys and sells happening while it is above 28%.
And that's a problem. Are you using these stochastics? Daily SOXL 1844?
Yes.
Do you have a specific date when that's happened?
Let's see. I'm looking for a clear one now because it's above.
Let me finish the presentation. I got about 4 more slides, and then we'll open it up to everybody and we can come back here. Would that be okay, Rick? Sure. Great. Thank you. Okay. So everybody hold on. Let me just finish up the slides and we can come back and tear this one apart. Gary, was kind enough to do a lot of back testing and share with us the inputs that generate the best looking results for each LETF. Floyd shared these with all of you or many of you with emails he sent, and Gary has also sent out emails. I just want to present some of them here today. For the TQQQ Daily, as recently as last month, these were the inputs that performed very well. Marcus Smith Daily Stochastics, 2014-4, daily stop of 5.1, trailing stop of 11, longs and shorts, exit cost of 33. Starting with $10,000 in January 2013, the above inputs returned $2.5 million as of December 31st, 2023. We had a total number of 266 round trip trades, a maximum drawdown of 56.5%, and a win rate in successful positive trading rate, 46.62%. For TQQ Weekly, from Gary Taylor, the stochastic type is MS Weekly. Entry was for stochastics 543, a daily stop of 13, a trailing stop of 18.1, a long of 12 to 65, exit across 28, and profit target 33. Starting with 10,000 in January 2013, the above inputs returned about $954,000 as of December 31st, 2023. Later weekly stochastic, so we only have 77 round-trip trades, a max draw on 46%, and a win rate of about 45.4%. Going ahead, SOXL Daily. These are courtesy of Gary and Chad Caswell, which is the indicator we shared with you. Starting with about $10,000 in January 2013, the above inputs returned about $7.33 million on December 31st. Total round trip trades is 52, drawdown of 55, and a win rate of 48.7%. That's using the indicator. If you don't use the indicator, the above inputs still return a very healthy $6 million by December 31st, 2023. This is SOXL Daily. For the SOXL Weekly inputs, we have our 533, the daily stop of 19.3, trailing stop of 28, exit cross of 33, and a profit target of 69. Starting with 10,000 on January 2013, the above inputs returned $2.4 million on December 31st. We have a total of trades around it. We maxed out on 44 and win rate of 53. The details of the performance in the year-over-year summer session in July, you can go into those details in the July presentation or detailed year-over-year performance.
Reggie, it's Floyd here. That on those last two slides, there's a transposition of numbers because you say the round trip trades for the daily were 207 and the round trip trades for the weekly were 52.
You're right. There's the transposition. I apologize, everybody. Slide number 45. This should say 207. I will have these corrected when I send them out to you in a PDF. The total
when you say weekly had 207 trades,
I will update those in the PDF I send out to you. If you're rewatching this, please keep in mind, this should say 55 round trip trades. Apologize for that. PECL Daily, here's another one, 2622, daily stop of 5%, trailing stop of 13, exit across 42, and profit target of 15. We start with $10,000, end up with $2.9 million on December 31st. Total number of round trip trades at 234, maxed out at 47.44, and a win rate of 42.52. We have stochastic of 442 weekly, daily stop and trailing stops. As you can see, with these inputs, $10,000 in 2013, January returned about $630,000 on December 31st. Again, my errors in my round trip trades, I have to change those. Matched on of 65.5 and a win rate of 43.7. This is FNGU. FNGU only started in 2019, so I only have the data from 2019 onwards. For those of you who want more wild ups and downs, FNGU is really an incredible kicker. Starting with $10,000 with these inputs from January 2019 to December 23, you would have returned $2.19 million. Okay? With a total number of 221 trades. In 5 years, you're doing 221 trades round trip. That's a lot of trading because the other ones that I showed you earlier, even the daily SOXL, they were doing the same number of trades over 11 years. A max drawdown of 46.7% and a win rate of 46.4%. This is the last slide. Floyd, go ahead.
FNGU is an exchange traded note supported by the Bank of Montreal. It's not an exchange traded fund. I called the Bank of Montreal and I had to go through a phone tree of about 7 people before I finally got to a person that knew anything about FNGU. But they did tell me that they're the 4th strongest bank in North America, which is important because if the bank couldn't support FNGU, it could be delisted. And I guess that chance is always there. But I just want to make sure people know that FNGU and SPYU, which is the S&P 500 times 4, are exchange traded notes. And so be aware that there may be some level of risk there. But last year, FNGU went 460% in 1 year, which is pretty darn incredible if you think about it. That's all I have.
All right. So, Floyd is Barry. Yes, sir.
Quick question. Is there a FNGU weekly input?
There are, I believe, I don't have them with me. So I don't know if Floyd had sent that email out to everybody with the spreadsheets and updated results and test data for the best performers. I've only included a few of them here. Floyd, do you remember if that was in there, the FNGU weekly?
Did you get the email? I sent an email out maybe a week or 2 ago that had all of the recordings of the meetups for the last 2 years. And at the bottom of that email was what I called a bonus section. And if you clicked on the link on the bonus section, it brought up all of the best strategies, including FNGU. Did you get that email?
I did.
So what you do is there's various tabs at the bottom of that best strategy. If you go to the others tab, you can find FNGU. I don't remember if Gary did a daily only or if Gary also did a weekly. The thing of it is, if you have TradingView, you can do your own back testing and decide the best stochastic numbers and trailing stop for FNGU. And if you come up with some cool numbers, let us know what those settings are.
I don't have TradingView though.
Hey, Floyd,
Yes.
in the sheet that you shared for FNGU weekly, it is 6,938%.
Oh,
Let me finish with the last slide real quick, and then we're going to go back to the earlier one. All the slides presented here will be available for download in a few days. The video recording of this event will also be available for download after a few days. For those who need specific data information, list of trade, you can email me at that number. At that address, omg.investor@gmail.com. Please be very specific in terms of which trades you're asking for, because if you guys just say, hey, please send me a list of trades, that's not very helpful. But you just specifically tell me which ticker, which strategy, what date, time period, starting and ending, and I'll be able to send that over to you. If you have any other comments, suggestions, questions, or feedback, please email me. I'm happy to answer them. Sometimes emails go to spam. If I don't answer you, that just means it's in spam and I haven't seen it. This is the last summer session. And after this, we'll return to regular fall sessions in September. They'll be presented by Floyd again. You guys will be happy to see Floyd going through his slideshow starting in September. And Floyd will send all the details of that later. So I have a question for Rick and Floyd. Should I terminate the recording now and then we can go on to discuss the other stuff?
leave the recording going.
Okay. Okay, everybody.
In September, we have Gary Taylor, who's our TradingView expert and has developed a lot of the back tests. Gary will be our guest speaker in September. So get your questions ready for Gary. And he's a very good speaker. He's an expert at TradingView, and it should be a great session.
All right, guys. For those of you done with the presentation, if you want to stick around, you can. This next part is going to be going through stuff with Rick and everybody else on that indicator. Yes, George, question.
I'd like to thank you, Reg, for all the hard work you did over the summer. It's really appreciated.
No problem. Thank you, sir. All right. Let's jump into this real quick. I'm going to go back to the slide real quick. All right, folks, just bear with me. I have Rick's chat over here. Rick says, here are the example of dates that happen when indicators over 28, January 13th. Let's go to this. Folks, I'm going to go back to TradingView real quick. I'm going to share that screen with you all to find out whether this indicator is leading us astray. Rick, we have January. Okay, so let's narrow this down to 2021. So we have indicators below level. The indicator must be greater or less than this level. What is level 28? So list of trades. Can everybody see my trading view screen?
Yes.
Excellent. Gary, you said it was on January 13th, 2021. That's weird because I don't have a buy on January 13th. Rick, I don't have a buy on January 13th, 2021. You see that?
Yeah,
Let's go back to the chart.
maybe we have slightly different settings, but I tried to recreate your settings during this call the best I could.
I'll go through the settings again with you. The first buy I have is January 4th, a rebuy on the 14th. Keep in mind, this for rebuys, it does not take into account whether or not the indicator is above or not. My impression is it's only for initial buys. Gary,
All of these examples I found, they're all rebuys.
Yogi, if you understand that too, that's a very good point. I want you to understand that because it's something it took me a while to understand too. According to you, Floyd and Rick and Gary's original strategy, which they took from a manual into Excel and TradingView, the requirement for an initial buy versus the requirement for a rebuy, whether it's weekly or daily, are slightly different. So when you have an indicator, anytime you initial your initial buy, the indicator will take a look at whether or not it's under 28 or over 28. But every time you rebuy, like in this case, you can see where a rebuy is initiated on Friday, January 15, 2021. As you can see here, the value is 31.43, which is over 28. But because it's a rebuy, the way the trading view script is coded based off of Floyd and Rick's rules is that for rebuys, Rick, please correct me if I'm talking beyond my scope here. For rebuys, it is slightly different. Am I correct?
Yeah, but that's it. I say that the script is not working correctly based on Floyd and my original plan, because what the rebuy does is at the time of the rebuy, it reevaluates, is there still a buy signal? If there is, you do the rebuy, but there is no more buy signal. There should not be a buy signal at this point because it is now over 28. And I think the rebuy code is not actually checking that external indicator. Floyd, you agree with my interpretation of the rule? It should not be doing a rebuy if there's no longer a buy signal, right?
Yes, my impression is when you put a secondary indicator, it is checked each time so that it's only effective for the initial buys. That's something that we really need to understand. And it would be nice to see if we could change the code so it's effective for all trades and see if it makes the strategy better or worse.
I
Okay.
agree.
In this particular case, the rebuy that happened on 15 January, the reason it rebought is the fast line on that day was higher than the slow line.
Right. But
So that's why I did a rebuy. If the secondary indicator was higher than 28, I would have thought that should have prevented the rebuy. So that's something we need to check on.
so, Rick, will you take that up with Gary? Or do you want me to bring it up? Or Floyd, maybe you can? I don't know. Who wants to do this?
We probably all should. You, me, Floyd, and Gary.
I'll put it in an email and send it to you all. I'll capture these specific trades you put in here and send that as an example. Just this one trade should be enough as an example.
And is Gary with us tonight?
I don't think he is. He would have said something by now.
I don't see him on the list.
Thank you, Rick, and thank you, Yogesh, for bringing that up. I had a feeling something was up too because it doesn't make sense. So now we're going to actually get to see a proper, thorough examination of the change of that code.
I think there's a lesson here for everybody. As we go through TradingView, or if we're using a different platform and looking for some really cool strategies to help us good performance, maybe the minimize drawdown, maybe the minimize the number of trades, is once you think you've found the sweet spot, the smart thing to do is to capture every single trade before you publish this and tell other people about it. Go through each and every trade and say, is this making sense? Is this doing what I thought it was going to do? If you find that it is, you can share it with everyone else. But occasionally we'll try a strategy. One time, Rick and I, maybe a year and a half ago, Rick and I was working on a program and we thought we had a strategy that was going to make $1 billion. Then Rick said, wait a minute, I got a code error. When he fixed the code error, we didn't make $1 billion.
Yeah.
Am I telling the truth there, Rick?
Absolutely.
Just because you get an answer doesn't mean the answer is right. When I was doing a college class in structural engineering, I remember one of my buddies turned a problem in and the teacher failed him. And he said, "Why did you fail me? I got the right answer." And he said, "Because you got there the wrong way, buddy."
Oh, this is actually a very good. I personally don't use additional indicators in my trading at this point, but this is a code issue, so we have to get it fixed. I'll bring this up after this presentation is done. I will send an email to you guys and Gary, letting him know, and I'll cut and paste that specific trade. And one example should be enough. If it's once, it's probably there all the time, and we'll find out. And the weird part is, Yogesh pointed out, why hasn't it done it before? So what's it not doing before 2020 that's causing this problem? It's never been triggered until this one buy. Yes, James.
Looking at the data, I suppose when you say it's over 28%, it doesn't count like, let's say, minus 30%, right? If it's below, then it doesn't count. It's a below 30% below the 50-day average, minus 30% below the 50-day MA. That's not considered over 28%.
If the close is 20% less than 20 above,
when it's so extended, it's overbought already, so that the buy signal wouldn't trigger, because your buy signal has a range from 0 to 80 or something. And
no, those are stochastics. That doesn't have to do with the actual distance from the moving average. This is specifically regarding the moving average distance from the close versus the stochastics are a completely different issue.
No,
So I'm thinking like when you are 28% above the moving average, that means it's already so overbought.
yeah,
And
That's why it works.
yeah, it's a valid comment, because we will find times when maybe like it was maybe 3 or 4 weeks ago, if you get a sell signal, there's other reasons why you wouldn't want to jump back in and rebuy. So I think that's a valid comment.
And Reggie, looking at the code, looking at that indicator, when I go 2013 through 2018, it really didn't hit 28% very many times. It spent very little time about 28%. So I'm not surprised looking at the indicator, it didn't filter out any buys. It seems like it was only later on, like starting in 2018, 2019, 2020, that it started spending more significant time above 28%. And I'm just looking at that percentage distance from moving average indicator and seeing
Along that line across back in time
exactly
when it goes far up.
Yeah. It wasn't quite as volatile back then.
No, it wasn't. All the excitement just pumped up in 2021. All right, coach, let me come back to the screen.
Frankly, I think it's a very productive conversation that we just had.
The fact that we found a potential issue with the rebuy part of the code using indicators is very important. We're always looking to improve and correct the code. So definitely that's a priority thing that I'll get on.
Exactly. And to be clear for everybody else, what we're seeing is that this issue is limited to only rebuys and only uses of this external indicator, the basic strategy. No, it's only when you're applying this external indicator. That's what it looks like so far.
Right. Yeah, you don't see this. When I first started working with this back in March, what I would do is I would export this list of trades, not necessarily just this stochastic, but weekly or even some of the daily. And I would go through them line by line, year by year, because I wanted to make sure that this script was acting in the way it was supposed to when it came to basic inputs. So I would actually go through year by year, and sometimes I'd go through 50, 80 trades randomly. I'd pick 10 trades from this year, 5 cases from a different year, 10 cases from another year, and just go through it for myself to make sure that I had enough confidence in the fact that the buys and the sells were actually getting done correctly, and trailing stops were being triggered correctly. And I would download all the historical data and go through it line by line, because the last thing I want to do is take the risk of a code being wrong and giving me false signals. I was confident enough that I checked enough that the basic code that does the buys and rebuys and the sells using the trailing stops, the stochastics, the daily stops, fixed stops, and profit targets also works well. I tested them separately. Basic code tested well for me in terms of the accuracy of the data and the accuracy of the triggers in the trade. Yes, Gary, go ahead. Gary, you there? You have a hand raised. Gary? All right. Gary Polovich, I cannot hear you. Floyd, did you want to say something?
No, I'm fine. If we're getting close to wrapping up, as George said earlier, the work you've done this summer is the first time in 16 years that we've had summer sessions. And Reggie, you've just done a fantastic job. You did a lot of time, a lot of effort, and I've received a lot of emails saying people really appreciate the work you've done. I appreciate it very much.
No problem, guys. Gary has a question. Go ahead. Everybody's raising their hands and nobody's asking questions. Floyd, can you mute yourself?
It's just an observation. I hope some of your money is invested this way. For all the good you've done for us, I hope you've made out well.
I had last 7 days of market chop me around a little bit. Overall, I'm doing all right. My stops got busted right through. I know Floyd, his weekly strategy got him out on time, so he's been sitting on the sidelines just watching the bloodbath. Am I correct, Floyd?
Yeah, I'm 100% in cash right now on my strategies. In the last 3 or 4 cycles, I'm up more than 100%. I'm using the weekly strategy for TQQ and SOXL without any secondary indicator, and I'm 100% believer that it totally works.
You heard it from them. So I don't usually use the weekly. I will go more with the daily strategy that I try out. And the TQQ, like I said, I got chopped up this past week. But what I've seen is I have gone through the indicators over the past 11 years. And there are times where if you look at some of the trades that happened in 2018, 2022, even 2023, back to back, you're getting cut every time, bleeding. It's very easy to just give up. But if you stick with it, it's the only way you're going to get to that, those $5, $3, $4, $5, $6 million that you see where your eyes boggle out. You had to take a few beatings, but stick to it. Unless there's some massive economic meltdown, we're still going to stick through it and everything looks like it's going to come out okay. Thank you all for attending. I'm more than happy to present these things. It gives me an opportunity to work closely and improve my own strategies. And people like Yogesh, Jade, and James throwing out great ideas. I appreciate your feedback on everything. If anybody has any questions before we wrap, James, go ahead.
One more question. I suppose what we are discussing here is not in taking the technical rules that Gary shared before, right? We're just using the code.
That's correct. Gary's technical rules were to be used individually. None of his technical rules are coded into
as
the
a secondary indicator. And I suppose at this point, we're just trying backhand on different parameters, and that's how we get to the optimal settings.
Yes.
Because I'm thinking maybe I could do a way so that I can iterate through all the combinations through code.
I might be wrong. Don't you use a factorial if you have 6 variables, 6 times 5 times 4 times 3?
Yeah, it would be huge, especially considering there's range.
But if you can code it to go through and check every one of those to get an optimum strategy.
Would it be a factorial, or would it be the case where it would actually be just multiplying them across? It wouldn't be 6 times 5 times 4. It would be 6 times 6 times 6, because you can reuse the same variable and use the same number for every single place. So it'd be more than the factorial, wouldn't it?
Let's just say
It's a large number. You would need a lot of processing.
if we could program it to come up with the optimal numbers, that would be really sweet.
And then, James, whatever way you have to do it, it wouldn't just be across the 11-year period, or it would have to be optimal numbers and going back testing them across 2 years, 3 years, 5 years, 7 years to be like, okay, is this really optimal across the whole thing? Because we've seen some strategies that perform very poorly for 6 years and then start performing. It's unlikely that an investor would be able to tolerate that much of a poor return for 6 years because they have no idea what's going to happen down the road.
No, but let's don't discourage anybody. If you can come up with a program, say for 11 years, then we can incrementally say, how did it perform? Does those optimal strategies work for the last 3 years, for example?
Sure.
And it can help us long-term good strategy to use, because one concern that I have is everything we're doing is looking backwards, and we're saying history tends to repeat itself, but we don't know if 10 years from now, those same variables will be the right variables for the type of market we have 10 years from now. So we need to be on our toes and not have pride in what we've developed. In the future, that number we were looking at, say 20% on the percent of 50-day, maybe that number should be different. We have to be aware that about the time you think you have the market figured out, you realize you don't.
Yeah.
Regarding the horizon concern, I should be able to put those as parameters as well. I can put 5-year, 10-year horizon, right? Those are just parameters in the request to the trading view server. So that should be okay.
So James, can I ask you, do you know of a way that you can automate this backtesting in TradingView? Have TradingView run
You click on some buttons and enter some texts. But what TradingView really does is it sends a request to the server, right?
Yeah.
And server calculates and gets back. I can inspect that code and just like program it. So like looping through all the combination of the parameters instead of like you clicking on the buttons.
James, you are talking my language right now. I'll put my email in the chat. Can you contact me or we contact you?
James, this is Floyd. Another thing that troubles us a little bit is that on most of the strategies we have, the maximum drawdown is a really big number. It's like 38, 45, 54% or whatever. Can we find a strategy where the maximum drawdown is maybe only 25 or 30% instead of 45 or 50%? As we're optimizing things, we still want to have good tool performance. But if we could reduce the amount of drawdown, that would have less stress on the individual trader. If you think your account is up $2.5 million and after 5 trades, you only have $1.5 million, that's pretty stressful.
Yeah, that's a big thing for me personally.
I need to iterate through all the combinations and get all the results, right? And then we can sort it in whichever fashion we want it to be.
That will be big, James. The prospects of that helping us is really amazing. Your willingness to help, and let's see what we learn.
Yeah, no worries. I think I learned a lot too.
How to get a hold of me, James, at TQQ.
I have your email. Yeah.
If you want to reach out to me or Rick or Gary, we can have a Zoom meeting or something and collaborate. I think it would be productive.
Okay. Yeah. I do that on a daily basis. So that's not a problem. Yeah.
And I'm not trying to put you on the spot here, but how much time do you need to take one of the strategies like TQQQ and do an optimization program? About how many days or weeks do you think that project would take?
I think I can do it maybe next week or so. The coding piece should be simple.
Maybe you could even help us report out at our September.
Yes. I think it should be doable.
Maybe we'll give you a module and let you share the results with everybody in September.
Sounds good. 10 to 20 minutes
Sure.
should be good. I think I just need to look at how big the number is for the combinations. I think that might take a bit of time.
We can talk about that, James, because I have some ideas about that. I don't have to go
Okay.
every
Yeah.
digit of every parameter. You can group them together.
Sounds good.
So glad that James reached out to me. We looked at my previous summer presentations.
James, thank you for speaking up.
This is Floyd. I'll be sending out an announcement before the September meetup with the Zoom link. For the sake of disclosure, I won't be starting at 4:30 Alaska time, 8:30 time, but we'll be respectful for people in the lower 48 states. Make sure we're as inclusive as we can be. Once Reggie gets me the link to this recording, I'll be sending the link out. We have about 700 Anchorage IBD members. I'll send the link out to all of the members. I'll update my summary sheet that I've got about a couple of years of meetings, links, overhead slides. We'll keep updating that as we go. If anyone did not get that summary sheet or recorded meetings, either you're not an IBD member or don't have it set maybe correctly to receive messages. And if you want to see that summary sheet, just send me an email at tqqqinvestor@gmail.com and I'll email it to you.
All right, folks, were there any other questions before we wrap up? We're going to end this presentation now. Everybody will get a video copy shortly with a link to download and a PDF with all the slides. Thank you very much. Have a great evening. The presentation is formally over. Have a good evening or good afternoon for our Alaska people.
Same thing. Goodbye.
See y'all.